reached a peak back in 2009. Actually, that was in March, and it's declined since. However, the blue line is the trustee deeds. Now, they've moved up and have kind of stayed up. And they jiggle about a bit because there's various political actions take place, like Bank of America's moratorium. So you see it dip down in November, and it bounced up in March, where they caught up with last November's low. So if you try and put a trend line on this, you can see the notices are going down, but the actual trustees are still as busy as ever. Now, if you think of that as a process, that means that the in-process foreclosures has to be going down, because there's fewer being created with notice, while things are just being closed just as fast as ever. And that is indeed the case. If you look at foreclosures pending, they are dropping faster now than we've ever seen. We hit 51,000 in December 2009, and the purple line is coming down. We're about 33,000 now. Now, we don't have to get back to zero to be normal. There are about 10,000 foreclosures in process in a normal year. That was back in 2002, and we've actually got more people living here than me, so probably something like 10 to 12,000 foreclosures in process would be considered normal. We're at 33. At the rate we're coming down, we're less than 12 months away from getting back to normal. Now, I don't know if that's, I'm not guaranteeing that's going to happen, but we're on track for that. So when people come at you saying there's a huge pile of bank-owned or huge pile of pre-foreclosures or huge pile of people in default, that's old news. That's stuff they should have been telling you back in 2008, not now. But if you talk to the professional investors who buy hundreds of homes at the trustee sales, their biggest concern right now is running out of things to buy. Now, I think they probably shouldn't be quite as concerned with that, because I'm worried about the population issue too, because eventually you get so many rentals you run out of tenants, but at the moment that's not a problem. I always like to look at both sides of every equation, so if I'm feeling optimistic, I have a day every week where I force myself to be pessimistic. And when I like to be pessimistic, I like to look at this question: where has the foreclosure crisis hit hardest? This is my, well, I can't do Maricopa because I'm doing it for Maricopa County, so Maricopa City is not included. This chart here shows by zip code, color-coded, where we've got foreclosures. More than 15% of the homes have been foreclosed are in red. Less than 10% are in blue, and in between 10 and 15, kind of average, are in green. So you can see, for those of us in the East Valley, Southeast Valley, we're mixed. Thank you for not being in the Southwest Valley, which has had a really terrible time. The worst reading of all is actually for 85043, Phoenix, which has more than 35% of its homes already foreclosed. More than 2 out of 3 have had a foreclosure notice. So you can see the whole of Tempe, much of South Chandler, the whole of Ahwatukee, and all of this Northeast Valley have been relatively unaffected. We've only got 2 or 3 hotspots: Queen Creek, 2 parts of Mesa, and this little bit that pucks itself in there, that's part of Apache Junction, a little bit that overlaps with Maricopa County. Also broke the 15% mark. So we've had a lot of pain, but thank you for sending the Canadians to help us out. I just wanted to put a chart together because this has come up so often. They've been overrepresented amongst the buyers for about 2.5 years now. If you go back 5 years, there were very few. About 0.4% of all homes went to Canadians in 2005. Right now it's between 4 and 5%, and in some parts of the valley it's up to 20%. Now why? It's not just because they like sunny weather. If you do that price chart that I started with, the blue line here is in US dollars, and the red line is in Canadian dollars. Again, I'm sorry that the scale is mixed off, but we're up there on the red line. We're at $150 a square foot was the price to Canadians back in 2001, and they're now at 75. So pricing right now is half what it was 10 years ago. To us, it's kind of a little bit lower than it was 10 years ago. But that's why when you've got a currency that is currently as strong as the Canadian dollar, they think it's a good time to be investing in real estate, and of course they can, because their real estate market has only gone up, hasn't had a crash. It might have one. I mean, I think there's quite a lot of talk about them being in a bubble right now. But it's not just Canadians. If you drew this chart for the Australian dollar, it's even more impressive, because the Australian dollar was worth 50 cents 10 years ago, and it's now worth $1.05. The euro is a similar thing, not quite as extreme. I'm very ashamed to say that the British pound has actually not done anything like it. So I can't go and get my friends and family back home and get them to invest in Arizona, because it just looks expensive to them. So I'm going to summarize. We've got overall demand outpacing supply. That's good news. The downward pricing has disappeared. We need to keep that investor demand going. Right now it's looking really hot, but if they got cold feet for any reason, that could change overnight. There doesn't seem to be any shortage of cash amongst the people who've, wealthy and invest in real estate. They're not running short of money. I'm sure they would like to leverage it more, but getting an investor loan is not always that easy these days either. The market above 300,000 is looking very healthy for the first time in many, many years, and it might surprise you to learn that the average price per square foot for homes above 300,000 has been going up since November. Now, there are not many appraisers who agree with that, but I can actually show you charts. Every single price range, no matter how you split it up, we're actually at a higher point now than we were in November. All the way from 300,000 up to 10 million. You don't see that in the press, because when they give numbers, it's usually at every price range. And so the bottom end, which has not been doing so well, cancels it out. We still have to worry about the areas with the high population decline. They're going to take a lot longer to recover, but I think most other areas have already started the recovery, and there's no doubt in my mind that we will see higher pricing at some point in between now and the end of the year. And in particular, this next few months is going to see an enormous amount of closings, and people start to get much more comfortable with the market having staged a proper recovery. So, I think, yes, that's my last chart. Thanks very much for your attention. If you have any questions, I'll be hanging about to